What's going on, everybody? It is February 20th, 2024. Day log episode over NQ and the trade review / live stream review over today. So looking at today, the closure, we pierced through last Tuesday, the low in here. I was annotating on the live stream how, at least for the opening focus, you should be looking at this low in here. And then what else did I annotate? The volume balance in here. So both of those were achieved today. I ended up actually going long today on the live stream, and I'll cover that and the reasoning behind that. But hopefully you guys were able to see, the trade management things kind of went in my favor today. I made a mistake, which in my eyes is something that's bad. I mean, it could have went really wrong today. This is something that obviously doesn't happen often, rarely. I was trading NQ instead of micro NQ. I normally trade micro NQ on my live account, my final live account, where I'm normally taking 5 micro contracts, and I took it on the standard mini. And I mean, I can place a little partial blame on live stream, but it's, again, self accountability. It's all my fault. And I know some of you are like, what, you made a bunch of money, how are you mad? To me, this goes back to even making money regardless of how much you made. If you made money and you didn't follow your rules or your discipline, and you don't assess that, you don't figure out, all right, I can't do that again. I got lucky. That's something that moved in my favor. And if I try to do that again, it's probably not going to work out in my favor, because today I could easily have lost a lot of money and I would have been very, very upset at myself because I just missed a small detail where I was just overlooking it. And that's, again, partially due to live streaming. I'm focused on a lot of things. A lot of things are on my mind. But from here on out, that's a main focus. So I ended up making about like $2,300 today. Not that money means anything. A lot of people ask me about money. Again, I think people that talk about money a lot and talk about lifestyle and all that, they're missing the point, right? I'm trying to teach you technicals. I'm trying to teach you psychology. I'm trying to teach you things that make you money. It doesn't matter how much is in my pocket. Yes, having transparency and having a track record, especially when you're looking for a mentor, is very crucial. But I think live streaming is the easiest way to weed that out, which I'm obviously setting an example. Anyways, let's go out to the weekly time frame. I want to start out here. So we have to think we have about 3 days left of the week, right? We're on a shortened week. So we have to think, all right, well, what is the probability of things playing out this week? We have 8 days left approximately on the monthly candle. Looks like we're having a really strong movement away from it. So this could turn into a bearish candle potentially. I don't have enough information currently. But looking at the weekly time frame, I would suggest, which I mentioned in the weekly forecast, gun in my head, I was looking at this fair value gap to at least be traded back into. That seems like the appropriate bias to look for. So, and the reason for that is there's the daily time frame as well was suggesting that, where on Friday we collapsed lower, not willing to go higher again. And when I was looking at today, I was annotating the relative equal lows and that volume balance in there. Just seemed like the easiest draw on liquidity. I couldn't see higher prices. So I couldn't make an argument for higher prices, but I could make the argument for lower. This is a bearish order block from Thursday of last week, which we traded up into today and yesterday. Utilize that, drifts off lower. I would believe going into tomorrow, we're going to want to fill in the rest of this wick in here and potentially trade down into this volume balance fully. If we fully get into there, I'd be looking for the low. And this would probably be towards the end of the week if we even get there. Who knows, things could change. But this portion, do you see from that high down to this low, that portion of this inefficiency is still open. So even though we've traded down into it, that portion is still left. So it may want to trade down into that. Now looking at the right side, I think we'll have some type of, preferably I'm looking at the open, high, low, and close of this candlestick. So open or opened right here. If I'm looking for a bearish day, I want to see the high be set first. So I want to see a wick higher, and that would be into this last up close candle would be a bearish order block as well. So if I can get that set going into overnight and then coming into the session, we can short down, that would be preferred. So we will see what price is looking like. But if I'm looking at just 4-hour, 1-hour order flow, I mean, this thing screams lower prices. I don't see higher prices in this. I can't make an argument. So this is a good example of, if I was to look at order flow, there's nothing for price to react off of in order to move higher. Yes, we're inside of this reclaimed fair value gap, but reclaimed is not as heavy as a fresh new fair value gap, especially when we've failed to go higher. We're shifting market structure. We're respecting higher time frame order flow. Those things are signaling to me that, yeah, we're probably not bullish anymore. And we've already traded into this multiple times. So it's not as a strong inefficiency or PD array. The opening portion, which I annotated today, was down here. So we trade down into that. So I'd be looking for the sell side underneath this low. And that may take a day or two to even get into it. If anything, we get into it to the end of the week. But that would be my sole focus, is looking for, can we trade down into that sell side? And looking at just this whole right side of the curve, right? What is it respecting and what is it disrespecting? It's respecting bullish PD, or it's respecting bearish inefficiencies, excuse me, and disrespecting bullish. So look at the left side of the curve. We're not respecting any bullish PD arrays, and we're respecting every single bearish inefficiency or up close candle, right? So traded under that fair value gap, dropped lower again today and here, right off the open, retraded back up into this, dropped off lower. I annotated in real time how we should be looking at the sell side liquidity underneath this low here, because all of these were relatively pretty equal. Even though we've taken it out with CPI, these are still relatively equal. Trading down into that reclaimed fair value gap in here, open portion, which was down here, I annotated. See from that high down to that low, that's still open. So price can trade down into that. Looking into a 1-hour time frame, I was annotating this morning, just looking at overnight in the order flow. What is it doing? What's the higher time frame suggesting? It was suggesting lower prices. So I wasn't able to get anything from here because the open, we immediately coming into the silver bullet, we already took out south side, nor was there really anything for me to go short. So I know I harp on a lot with narrative and how you should be trading within the narrative. And some people may have saw me today take a trade that was kind of counter the narrative, but here's where, if you're very experienced, this is still trading within the narrative. I talked about multiple times when I was walking through this trade is how either A, this was an outright reversal because we've taken out sell side and we're inside of a new discount, or is simply a discount or a price to retrace into a premium before dropping off lower again. So if I know, let's say I'm overall bearish, I don't love doing this. It's not my particular style, but the setup was too clear to me today not to take it. If I know I'm looking for overall lower prices, but I know, or prices at least suggesting to me, we're going to have some type of retracement into a premium before we drop off lower, I'm still working within the narrative. That's still utilizing narrative, right? I'm still working within that idea is, okay, well, I can at least long in this retracement. I'm not going to have huge high expectations for a huge runner, but I'm working within that expectation that price should retrace into a premium before selling off again. So if you saw my long today, it was simply me working within that idea as well. If we continue to trade off lower, at least I'm just catching the retracement. So if we move down into lower time frames in here, the new week opening gap on, this is the current new week opening gap. Look how beautiful the respect is. I mean, it's phenomenal. Old new week opening gap in here. Look at the bodies respecting it, and then drips it off lower. Look at this old new week opening gap, even that just small little area of price. Look at where the body's respecting it and reverses off of. That's not a coincidence or something random. I'm fascinated still by it. It's new week opening gaps have always, they're my favorite PD array. I don't use them to enter into price, but I utilize them to navigate price. And they are the most, I think, accurate when it comes to classic support and resistance. They're the most accurate in terms of that. They're beautiful, man. So in here, let me see. I took it on paper trading. Uh-oh. That is the wrong thing. If I can't get this, here we go. I just want to show the executions if you weren't there on the live stream today. So this whole time, remember, we took out the sell side liquidity pool, which is resting at those relative equal lows. I may not be able to go back, but in here, I'm understanding that we've reached into a new, fresh, basically discount. What happens anytime we've taken out sell side and we make a new low is price can be allowed to move back into a short-term premium, just basic market structure, lower low, lower highs. If it made a new low, a new lower low, it can be allowed to move back into a new lower high to print that. So this whole trade was based off of the idea is, well, if price is going to be bearish today, at least all I'm going to do is be looking for a long up into at least equilibrium. I don't take trades when I'm countering the narrative. I don't take trades anything above the equilibrium because now I'm at a point where price could sell off. But anything beneath that, if something prints inside of this area, I'm allowed, because this is a discount, right? From this dealing range high down to this low, this is a discount. This is a premium. I don't want to be longing inside of a premium, especially if the narrative is bearish. So I'm allowed to take a trade inside of this discount, but I have to wait for a signal. I have to wait for something to signal me to get into the market. Something, a model with time has to print. So I was annotating how we had this premium SIBI up here. And all in here, there's nothing that would signal me to go long. All in this price action here, there's nothing for me to get signaled to go long. There's a bullish fair value gap in there, but that's not a strong enough energetic displacement to signal me to get into the market. And in here, we displaced higher, getting above this high. And I was annotating how this last up close candle is your bullish breaker. Bullish breakers are or bearish breakers in general, are a huge determining factor of at least some type of change in state of delivery of price. It's telling me that we're shifting to a different order flow. So in here, as soon as we get above this high, this low, this high, and that lower low, what is that pattern? That's a bullish breaker, right? Even though it's really fractal, it's on a 1 minute time frame, that's your bullish breaker. So price gets above that. We dip down into, we didn't even meet the breaker, but it's telling me what? It's telling me order flow is changing. Even if price doesn't react off of the breaker, it's still indicating to me that price is changing basically its state of delivery, right? So we dropped down to this fair value gap, and I was annotating how I want to see that reaction off of it. I even annotated in live time the exact thing that would happen with these little trend lines. Go back to my execution video. I literally printed this. And how do I know that? Because I'm so confident within these concepts that I'm not afraid of missing something. I know these things form all the time. So I'm waiting for this reaction off of here, especially when we're, I'm not trying to catch a low. I'm trying to see, all right, at least one reaction on the bullish side, bullish PD rate to give me that confidence to go long. Then there's a fair value gap in here. It shouldn't retrade back down to this fair value gap. It shouldn't retrade back into the breaker because we've already expanded past that. It should respect every fresh new bullish PD array. So I go long inside of this fair value gap. I set a limit, and then I was targeting any highs, buy side, or any inefficiencies above price. So this high here, that's what I was annotating. I was annotating this high here as well. And then that premium fair value gap. That's what I'm looking at. That's what I'm annotating. And then I annotated how this bullish fair value gap, I was trailing my stop loss into profit, because if we are truly at least going to expand a little bit higher, this should be respected. Same instance in here. It's the last bullish PD rate. It should be respected. And we didn't. I ended up getting stopped in profit, which was fine. It's exactly what you should be doing. And that price just sold off to continue the overall narrative, what we were looking for, which was lower prices. Am I upset or mad I didn't trade any of this? No. I got what I needed out of the market, and that's all I could ask for. And to add into all of this is beautiful, which I annotated in real time. What is this time window? It's the end of the silver bullet macro. So it's giving me confidence that, okay, I'm ending the silver bullet. We're inside of the macro. Price should spool quickly to a draw on liquidity. I mean, it's perfect. I can't describe it any other way, but that's what you'd be looking for. That's a perfect model. I mean, in a sense, it's a 2022 model if you want to look at that. Sell stops being ran, shift in market structure, fair value gap, target buy side. But if you combine everything else I just said, you have a well rounded scope of what you should be looking for. So I hope that helped today in the review. As far as everything else in here, that's kind of your homework. I'm not going to go over it, but you can see order flow in here on a 1 minute time frame. What I annotated in here, what did it react off? What did it react off of? Go to your 1 hour. There's something in here we traded off of, and we continued with the overall narrative to target sell side in here. So that's your homework for tonight. All right, so that's gonna be it for today. Until tomorrow, good luck and good trading, everybody. Be safe.